Dhirendra Kumar, CEO at Value Research, joins us in the show right now. Dhirendra, first let's analyze the year gone by, a rewind. What have been some of the best categories of funds that have outperformed in 2018?
After a great 2017, 2018 has been a generally disappointing year. In fact, the only performing sector fund has been the technology, which is an outlier. It has had an outstanding performance in 2018, and we have got surprises all over, and disappointing surprises, nasty surprises. In fact, the nastiest surprise was some of the liquid funds declining in value or falling in value on an overnight basis. The IL&FS crisis hit the funds. So 2018 generally for equity has been disappointing. We don't have too many bright spots here. Most of the fixed income funds, even the returns of some of the generic categories are quite muted. What actually gave 7%, 8% last year is down to 4%, 5%. So the averages look very bleak, and that I think is good news from from if we think in terms of outlook. Things don't seem to be as grim, and so generally speaking, 2018 a disappointing year.
Right. What is the outlook then on large cap equity funds? Is this the go-to for long-term investors? And can you tell us some of the large cap funds which you're betting on and are your top recommendations for 2019?
Large cap funds generally have lost the plot. The few funds which are able to outperform, I'm not very sure they will be able to sustain that. Large caps do have a case. In fact, the strongest case for large cap is that today you have the Nifty and the Nifty, Junior Nifty, the next 50 ETF, which turns out to be the best performing large cap fund. In fact, they are best performing for one reason. This year large caps did well. Some of the heavyweights of the Nifty and the Sensex had a great year. Generally speaking, and the actively managed funds have to be necessarily diversified. As compared to that, the Nifty and the Junior Nifty, particularly the Nifty ETF, with its lowest expense, has turned out to be the best performing fund. And all actively managed large cap funds are inconsistent. So I would say that if investors have to go for large caps, they would err on the side of caution. Indexing is well on its way to become mainstream, and they're pretty large funds. Go for the Nifty ETF and the Junior Nifty.
Multi-cap funds have been the go-to category. Do you have any recommendations for multi-cap funds in the coming year?
Multi-cap funds have been the go-to category. This should be the mainstay of any equity investor. And today we have a problem of plenty. And when I look at multi-cap, I'm actually tempted to include, the value fund category. Today, SEBI has classified 16 kind of equity funds. But I would say that 3 categories should be clubbed to make the multi-cap category, which gets you the full market exposure through one investment. I would say the value fund, the multi-cap funds, and the large and mid-cap funds. Together, they actually make up the largest, number of funds. And if I have to choose some, the growth-oriented ones, I would say the Axis Multi-Cap or Mirai Asset, India Opportunity. They're the growth-oriented ones. Or Franklin's Focused Equity. That's another. So these are the promising growth ones. If I have to look at our Quantum Long-Term Equity Fund in the value category, so mix it up. Then you have the Invesco Contra, which looks very promising. Likewise, IDFC's Sterling Equity. That's another Sterling Value now it's called. So a lot of name changes in recent times. So I'm still getting used to the names. So these are the promising ones. But the important thing is that take a real long-term view. It's just not for namesake. 2018 has been a grim reminder that the disclaimer that we get that mutual funds are subject to market risk has been most visible, has been experienced by investors. And to profit from that, it is important that you stay invested, take a view, be regular, be disciplined, don't invest at one go, and carry on with this multi-cap fund. I think the active management still is going to live long, In the large cap category, as I said, it doesn't make sense, but these multi-caps fund managers will be able to add. And when we look at the long-term return of these funds, the numbers still stack up very handsomely.
Right. You know, investors have burned their fingers in small cap funds. What is your advice to them?
You know, this will keep happening every 4 or 5 years because one should not forget that 2017 was a year when small cap funds went up by 50%, and reversion to mean is a very natural phenomenon. You know, things are cyclical, and what goes up very rapidly also comes down very rapidly. Also, small caps are vulnerable. Their ability to withstand the market turbulence, or a competitive environment or an economic struggle, they could be most vulnerable, and they could be fragile, just their scale itself. But I still feel that the mutual fund investors who invest in small cap funds, they get 2-3 benefits. One is that they keep away from the garbage. The universe of small cap stocks which mutual fund managers have invested in is far narrower than the small cap universe available to stock investors. That's one. Your ability to average through a mutual fund, the due diligence exercised by mutual funds, and then the instant diversification, I think it plays a role. So I would say that if you're taking a 5-7 year view, if you look at, if you look at, 10-year return, 7-year return, 8-year return, small caps, the average return is substantially higher than the multi-caps and the mid-caps. So if you have the stomach, go for it, stick to your plan. If you accidentally drifted, if you just looked at the 2017 numbers and got started, and you are getting very upset, disappointed, and unable to withstand the decline in value, square up your losses, walk out of those investments, and get back to a balanced fund, because small caps are not the way for investors to start their investments. Maybe once you get used to the ups and downs of the market, they're a nice way to go. They give you, because without that appreciation of what it is, what you will experience, you may not be able to take the full benefit of it, and they will prove to be rewarding. The promise of a small cap is that when they become a mid cap or a large cap, they turn out to be a bonanza. And that is what we have seen. What was erstwhile DSP, BlackRock, micro cap, the long-term numbers still stack up despite a recent meltdown.
Right. So which are the select top small cap funds that one can look at for 2019, Dhirendra?
I will give the recommendations of, the funds, the small cap funds which I like, but they are not for 2019. I would say that, if you are beginning to start in 2019, then you have to think in terms of investing till 2024. Have a 5-year view, do your SIP, and my choice will include Franklin Smaller Companies Fund, Reliance Small Cap, L&T Emerging Business, even DSP BlackRock Small Cap Fund. They are the promising ones. They have a long history. They have a quality focus. Another one, if I have to add, I would say HDFC Small Cap.
And which are the select top small cap funds for 2019? I think you pretty much conveyed some of your top themes and top picks there, but could you reiterate?
It's difficult for investors to take advantage of the volatility. For investors to take advantage of the volatility, and if you expect that the markets will remain volatile, go for hybrid equity fund, because those are the funds which will be able to, which are configured, which are designed to benefit from that volatility. Those funds, they rebalance their portfolio every now and then. So if market is going to remain stay put without going much anywhere, yet go up and down more often, then those are the funds. There has been occasion when the market has drifted, gone up and down, but actually gone nowhere. Though that's the time when these balanced funds turn out to be the best performing funds, and the bigger beneficiaries are the ones where the fund managers are able to rebalance it on a day-to-day basis more often. So go for that if you think that you want to benefit from volatility, but that is not a sound strategy. That is, of course, choosing balance. Those aggressive hybrid funds is a great way to invest in equity for anybody who is getting started, because they don't give you the shock of an equity market decline, which investors are not prepared for in their initial stages or journey of their investments. So those investors, they should definitely start only with those funds. But don't bet on a specific kind, and earmark your long-term allocation. Go for the multi-cap, or build your own portfolio of one multi-cap or one mid-cap or small cap. Stick to your plan, and don't stop your investments through the lean times. We will get bad times. We are getting into a year with a lot of anxiety with the election year, with all kind of things which we are talking about, the trade wars and whatnot. And I don't think these noises are going to come down. There are more negatives being talked about, or apprehension. But invest with confidence, have confidence in your plan, and stick to this plan. Have this time frame and your discipline, which will work to your advantage.